is Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
DHFL has missed the deadline to pay NCD holders about 1,150 crore rupees.
They have a 7-day grace period now to avoid default.
Sources close to DHFL say that Blackstone is likely to pay the company around 2,500 crore rupees for Aadhar housing finance by the 10th of June.
DHFL could confidently put out that press release that within a week they will make the payment. It appears that a stake sale will happen sooner rather than later.
I don't think the window will be open for this company. Now, somebody has to buy out the paper being held by this company in a short order, which is also very difficult.
Good morning. Welcome to a very important bazaar and days trading. I'm Lata and with me Anuj and Sonia. Yes, DHFL is going to spoil the party, but I can name 5 things that is going to go for the bulls. In the first place, we have to absorb a 700 plus point rally on the Dow Jones and some concomitant rallies in other asset markets. And well, we have to absorb the fact that Jerome Powell clearly said that he is looking at rate cuts as a possibility. The other big reason is that even as you see this rally in risk assets, you see crude going into bear terrain, and that is a double positive for Indian markets. And finally, the monetary policy is expected to be extremely positive. A rate cut may have been priced in, but if the Reserve Bank were to sound more than expected or adequately accommodative in its liquidity stance, and let me tell you, liquidity is gushing at this point in time. We broke that story on since Monday itself. The interbank system has gone surplus liquidity. If there is some reiteration that this will be the shape of things to come, that will be another very big positive. So yes, again, DHFL is going to sour the mood, but my sense is that there are enough compensatory factors. Morning, both of you.
Hi, Lata. Good morning. Hi, Anuj. Morning. So big morning lined up, right? Because of the RBI policy. But what exactly is priced in? Anuj, you were talking about how this market has been climbing every wall of worry. Perhaps today, if that rate cut comes through, it may even climb the DHFL wall of worry. But what really is priced in? I mean, if there is a 25 basis points rate cut, as well as, if the stance is accommodative, as a lot of people believe, has the market already reacted to that?
Morning, Sonia. I look at risk reward, and that's what I just tell our retail viewers, because ultimately it's about how you should make money in the market. What has happened? Remember on Monday when all round Qs were negative, spoke about possibility of a big rally, and that's how it happened. On Tuesday when the Qs were positive, actually the market fell, and we almost closed at the low point of the day, though there was a bit of a recovery towards the end. Like you said, it's a bull market. It will latch on to positives. I think today perhaps the market starts a bit lower because of this DHFL issue. But, of course, you can't just wish it away. It's a reality that DHFL has defaulted. So, obviously, the whole last couple of days, Twitter was abuzz with that. Though, as Lata also broke the story, there's still time for that deal to happen. So the market will give a bit of a benefit of doubt till 10th. I think what makes me a bit more positive about today's trade is this FI selling, both in cash market and in the derivatives market. They sold in cash, they covered longs in future, and they added fresh shorts. On Tuesday, the reason I was bearish was because there was this all-in from FIs on the derivatives market, and the market was bereft of short positions. Market needs shorts to rally, and the market now has some shorts. In index futures, there was unwinding of longs, and about 7,800 shorts were added. And in index puts, 15,000 puts were bought. If Tuesday's low is protected, and by protected I mean say by 10-20 points, it can give up. But if Tuesday's low is held, in that case, perhaps you'll have a decent rally today. This DHFL, I think was the biggest open secret in the market. Yes. Everybody knew that this is going to happen. It was a matter of when and not if. Yeah. I think it's played out now. Contagion is obviously something that we'll talk about. Remember when IL&FS issue was happening, the market did sulk a lot, and that was a time when we were actually in a bit of a bear market. Still, the market sort of climbed through it. Ultimately, the market will climb through this as well. Of course, there would be some impact,
wouldn't there be a direct impact in terms of flows, sentiment, retail investor flows, etc.?
I doubt it, Sonia. Look, obviously, what this will do is, and this has been my stance for a long time. If you are putting money into fixed, into bond funds, into fixed deposits, into money market funds, your aim should not be capital appreciation. You should be looking at safety. So, for a bond fund to lose 30%, and it's really, and what's the maximum you're getting? 2 or 3% more than FD rate. So anyway, that's a different debate. But also what I'm looking at is a rate cut, not from the index point of view, but from the mid caps point of view. Because you've seen a bit of a mid cap rally. I think this a lot of this rally is predicated on fiscal and monetary stimulus both. So today, if you have monetary stimulus, the market will also bank on some kind of fiscal stimulus going forward, perhaps into budget, and that's why this mid cap rally perhaps still has some more legs, at least up until budget, and a rate cut should prove that point further, I think, today.
Okay, I just want to add that when we all will say that DHFL's possibility of default was factored in. I mean, why did IndusInd fall all these days? Why did Yes Bank fall? Why were the ADAG group stocks under pressure? So it has been factored in. But still, when an event like this happens, I wouldn't be surprised if there is a further reaction. We should not exclude that. Let us be prepared for it, though I think that the other parts of the market have enough reasons to cheer.
So because it's such a big event and we have the RBI policy, apart from the usual, the rate cut as well as the accommodative stance, do you guess that the RBI could also make some announcements on HFCs in terms of liquidity, etc.?
Okay, well, first, I don't think they'll change their rates from 25 to 50. My own guess has been 25 on MPC. Everybody said 25. And you don't change that because the first 50 has not been passed on. So why, waste all your ammunition when it is not immediately useful? The next policy is only 8 weeks down the line. So I think you can give another 25 later, even if you're faced with bad news now. I think they'll stick with 25, and they will be very emphatic about liquidity. I think besides changing the stance, which is again a minority at this point in time, my MPC voted 4:1 in favor of a neutral stance. But the one man who voted accommodative is Pranab Sen, and I give a lot of weight. He normally calls it right. So I think it will change to accommodate. Even in other ways in the press conference, they will show that right now there is a liquidity surplus and we will continue to keep it that way. But more importantly, I just want to point in detail. Will the MPC have reacted to DHFL? The MPC meeting was on Monday and Tuesday. Wednesday was a holiday. So my sense is the MPC guys would have already sent in their minutes. Okay. And therefore, I don't think there is a DHFL impact on the MPC's core monetary policy. Another point would be it is not even their mandate. Yeah. Their mandate is only to look at the macros. So if there is any package coming, a package could come because the Reserve Bank has been watching NBFCs like a hawk. And they've been watching even flows into mutual funds. So that is where their eyes, my senses, will be trained. If there is a panic reaction in terms of outflows from funds, then perhaps a bigger package will come. Otherwise, I think it will be a smaller package, like, banks can keep lower SLR, and that whatever money they save from that, they can give NBFCs, or they can even give a refinance. You give NBFCs and we will, refinance you that amount. Something like that can come, but my sense is it may not come today. Today may be generally soothing noises, and a good package can come on Friday night, which is usually the Reserve Bank's style of. And if anyway DHFL money is coming, then they can take their time and announce a better package even later, looking at how things are. You don't want to rush in. So my sense is today I'm not expecting big packages. Okay. I think there will be big talk boosting, Mario Draghi's whatever it takes. Something like that may be mentioned by the governor.
All right. We have about 3.5 hours before we get to know what's on the RBI governor's mind. As we wait for that announcement, let's take a look at what our wise experts have to say as we head into trade this Thursday morning. Hemant Sambatur of Deutsche Bank says they expect a further uplift in the Indian markets in the short term on the back of additional foreign investor flows into equities, mainly due to reform expectations targeted at revitalizing the economy and the market's relative insulation from the ongoing trade war with potential collateral benefits. Stocks favoured by their strong margin scenario baskets include the likes of ICICI Bank and L&T amongst large caps, and RBL and Indiabulls Real Estate in the small and mid-cap universe. Over the next 3 months, Deutsche Bank sees an upside of over 10% for the market, and especially for growth factors.
Okay, some money market views. Mohan Shenoy of Kotak Mahindra Bank says lower Brent crude price and rally in Indian equities and bonds is rupee positive. However, fears of a global slowdown and its impact on Indian exports is capping the rupee strength. He expects USD INR to trade in a range of 69.30 to 69.70 for the day.
And on the bonds, Mohan Shenoy says a 25 basis points rate cut and a change in stance to accommodative in today's MPC meeting is already priced in by the bond market. However, there is also an expectation of front-loading future cuts to stimulate the economy with a 35 basis points rate cut instead of a conventional 25 basis points cut. Expected trading range for the day on the 10-year is 6.95 to 7.05%. So it will continue to be below that 7% mark is the expectation.
Okay, let's talk about the global cues. They look positive this morning, of course. Here's Nigel with the world view.
Well, positive indeed. The US markets ended well in the green. The Dow ended with a gain of around 200 points. And keep in mind, we were shut yesterday. Put both those 2 days together, the Dow was up nearly around 700 points in the last couple of trading sessions. What really fueled the rally was Jerome Powell saying that there is a possibility that he's going to go ahead and cut interest rates out there, because he wants to keep the growth levels really sustainable at current levels. So on the back of that, we have seen this big rally on the US markets. Why, in fact, is the call coming in for a rate cut now? One is that the non-labor data as well that's been coming out of the United States has been looking weak. And the second factor is that these trade tensions, they're having an impact on the economic data that's coming out there. And in terms of economic data, well, yesterday there was the private payrolls numbers that came in, and the jobs added were just 27,000. Remember, expectations were for a number in excess of around 170,000 odd, and that's the worst print you've seen all the way since March 2010. So economic data not looking too good. European markets, though, they had a big rally yesterday, all the three frontliners, but the Italian index was under some pressure. This after the European Commission said that, they're threatening disciplinary measures on Italy after rising public debt. The bond yields moved to around 2.6%. The banking stocks in Italy were down nearly around 2% in the overnight trading session. This morning, the other cue that's coming in there is that the talks between US and Mexico, well, they failed to reach an agreement in terms of the migration issues. So they're going to go ahead and increase tariffs on Mexican goods by nearly around 5% odd. Asian markets, they're mixed this morning, but besides the equity markets, the positive for India is that crude oil prices continue to hover at multi-month lows. Gold prices, though, they have moved to the highest levels you've seen in the last 15 weeks, while in fact the SGX Nifty for starters is indicating a more or less flattish start.
Okay, thanks a lot for that, Nigel. Flattish, there are enough positive and negative cues, but then all eyes are going to be on the Reserve Bank policy, and it's coming in a context where a large housing finance company, 1 lakh crore balance sheet, has defaulted on one payment. CNBC-TV18's own survey among market participants done before the DHFL default shows that 90% expect a rate cut, and most were betting on 25 basis, a small minority of 20% expecting 50 basis. Jahangir Aziz, head of emerging markets economic research at JP Morgan, joins us on the phone line from New York. Thank you very much, Jahangir, for joining us. Now that there has been a default of a housing finance company, how does that alter the MPC's approach? Will they be more dovish?
Look, the MPC is only supposed to do change interest rate policy, right? I mean, that's basically what they can change. Now, the action that is required in this case does not belong into. It's not part of what the MPC can or can't do. And more importantly, I think it's the government that has to play a bigger role, not just in these insolvency cases, but also in a more general sense in what's happening to the non-bank financial corporations. So my guess is that even though the MPC will talk about, the concerns about liquidity, concerns about solvency, there isn't very much it can do. All it can do is to cut rates, and our sense is that they will cut rates. This has been a call for, 2-3 months now. And I think that given what's happening globally, given what's happening to the Fed, I wouldn't be surprised if after tomorrow's rate cut, there will be more added by the market and analysts.
Jahangir, hi, good morning. So the RBI will cut rates today. Anything for the housing finance companies that you would expect? I mean, the DHFL default is the big story overnight.
Again, the Monetary Policy Committee can only change interest rate. That's the only thing they can do.
Jahangir, the question is not what the MPC will do. The question is today RBI will present the MPC statement and it can do outside. RBI is free to do. So do you expect any statement either in the statement itself or outside it or at the end of day a special package?
Right. So I think there will be some effort that will be done to save the increase liquidity in the market. But I don't think there is, the kind of permanent liquidity injections through CRR cuts, etc. I don't think that's on the cards, number one. Number two, as I said, in an insolvency case, you can, put band-aids by putting more liquidity. At the end of the day, it's an insolvency case, and that's when the government has to step in. This is true not just for this case, but also true in general for most of the NBFC problems. That the longer we wait, longer we let the liquidity problem fester, the quicker it turns into a sort of insolvency problem, and therefore that requires the government to step in. The RBI can put up some things, but it's basically going to be a band-aid.
Okay. Jahangir, hi, good morning. But do you see any contagion risk to the system because of this DHFL issue?
Look, that's difficult to say about there are contagion issues. In general, when you have the kind of liquidity squeeze that we've seen, not just in this case, but for the last few months, it usually ends up turning into insolvency, and that insolvency almost necessarily adds to the pressure on it spreads, it creates fear, there are counterparty risks that emerges, and ultimately it will have to be paid for either by the government or by the corporates or by the banking system. And I think the longer we wait, as we did in the case of the banking system, the larger will be the hole, and the larger will be the NPL problem.
Yeah. Jahangir, very quickly, do you think there is space for many more rate cuts? I mean, did anyone expect that the global yields will fall by 1 percentage point in the last, 8 to 12 weeks? There is a huge global scare. Crude is in bear territory. So do you think India has more space and not just 25 and 50, but this year we could see more?
So if you're asking me, should the RBI be cutting rates? And my answer is no. No, because at this point in time, given what's happening into the global economy, we really do not know which direction dollar will go. If dollar strengthens in this risk-off environment, I think there will be significant pressures on all emerging market countries, including on India. If both the US-China trade and the US-Mexican trade problem go all right, there'll be another bout of risk-off. Rupee will come under pressure. And, I know that the RBI does not believe that it can defend or it should use the interest rate for defending the exchange rates. For financial stability states, I would be much more cautious at this point in time, given what's happening globally.
Okay, we do have you on a scratchy line, Jahangir. So I'm going to quickly ask you, you said you're expecting a rate cut today, but by how much? Is it a 25 basis points cut that you're expecting today?
Yeah, I don't think it'll go beyond 25. I think it'll go 25. And, at that point, we have to sort of figure out whether or not there'll be one more rate cut to control the language. But I would say that, we in India probably are underestimating the Mexico-US trade war far more than we should be.
Okay. That kind of a contagion can happen for EMs, is it? All right, point taken. I guess the Reserve Bank will be cognizant of what possible dangers can come from the external front. Thank you very much, Jahangir Aziz, for joining us. Well, the reason why I asked about the global backdrop is the backdrop is so bad and the past GDP number is so bad that even if the vote for a cut came instead of 4-2, like last time it was 4-2, Chetan Gate and Viralacharya not voting, it's quite possible today it will come with a larger number, say at least 5-1. So even that will be a very positive message for the market, the emphasis with which the rate cut comes.
Okay, well, Helen is also here to tell you about the list of stocks that you need to watch out for as we head into trade. Of course, DHFL will be top of mind, but apart from that, Anuj, what are you looking at today?
So today, let's see how the housing finance stocks react. I think, Sonia, the most important stock for the market over the last 1 week has been HDFC Limited. My sense is today that stock becomes very important because, of course, that's the it's a completely different league altogether. So that my sense is money moving into some of these high quality stocks. So that's something to watch out for. Also, it's the weekly options expiry. So it's twin HDFC Bank. That's also an important stock to watch. Of course, it is both Nifty and Bank Nifty's weekly options expiry. So HDFC Bank as well. My sense is that if Tuesday's lows are protected even post policy, then these could be the two stocks which could lead to any kind of market rally.
Okay, fair enough. Well, I'll take the easy one. DHFL, you should see a substantial fall. After market hours, we learnt about that 1,150 crore default to some mutual funds and banks. And all the three agencies, CRISIL, ICRA and CARE, have downgraded all instruments, bank facilities, CPs, bonds. So now what will come as positive? Blackstone has, we have confirmation from sources close to DHFL that the Blackstone money is coming on June 8th because they had to wait for 1 month after the advertisement, and that will pay up this shortfall. We also have sources telling us that DHFL is close to the deal. Now, that's up in the air, but with this kind of a pressure on their head, chances are that they will be distressed enough to agree. And, the same names, Lone Star, Cerebras and Apollo, Aeon Capital are interested. So I don't know, if they are interested and they're buying the stock, then somewhere the fall could be arrested by some people wondering if DHFL's fortunes will turn when the capital comes in. So my sense is at some dip, there will be buyers. Okay, well, the stock has already lost about 60% of its value in 2019. So severe wealth destruction there. But there are companies that have an exposure to DHFL, right? Names like Yes Bank, Indocin. We've seen a fall there. You expect some more today? Yeah, let me run through all those who have exposure. 50,000 crore, DHFL's book is 1 lakh crore. 50,000 crore is lent by banks. Among them, largely PSU banks, SBI included. SBI has a big exposure more recently as well. But among the private banks, Yes and Indocin have, I think, about 1.5%. But my sense is that's been fairly well discounted. We have that. You remember when Yes Bank was under pressure, we used to say 10% of Yes Bank's exposure is to the 4 groups, ADA, GSL, ILNFS and DHFL. So that was pretty well known. And then I would assume a little bit Reliance Nippon. That is the only listed MF which has an exposure HDFC doesn't have. And then there is the other ecosystem of companies which will get affected. If money goes away from mutual funds because debt NAVs have fallen overnight, then there are problems for people who borrow, the NBFCs and HFCs who depend on mutual funds to subscribe to their debentures. So today my sense is you are going to get some kind of a negative impact on real estate companies, on housing finance, that is Repco, Indiabulls, as well all L&T Finance, NBFCs, Edelweiss. So the entire ecosystem will take a sentiment beating today. Okay, well, that's the rub-off impact that DHFL would have on a whole host of dependent sectors. But Eicher Motors will also be on our radar. Vinod Dasari, who's the newly appointed MD of Royal Enfield, had his first analyst meet yesterday. And in that, his 3 major strategies. One is, of course, to expand the market in India, to reimagine the brand because he feels that the brand has taken a bit of a hit lately, and that transition to BS6. So he did mention all of the costs that are involved. He also spoke about working on mass customization of bikes in India.
He's planning 350 new stores in 2019. Basically, the target is to increase the Royal Enfield retail footprint to 1,100 towns with 1,350 stores. So there is that expansion plan there. They aim to be among the top 7 motorcycle players in the global market in the next 3 to 5 years. So he outlined a big global strategy as well. They have currently 100 multi-brand dealers in North America. Now, because of this whole DHFL issue, there were a lot of questions on financing. He did say that there are no issues in financing for Royal Enfield customers. So that rumor was squashed. And finally, he says he aims to grow at double the rate of the industry in the next 10 years. So I assume there would be some positive sentiment because now there's clarity on what the new MD is thinking about.
Okay. Well, separately, I should have said that today, with such expectations of a rate cut, generally, I think auto stocks should do well. The expectation will be that cost of capital cheapens. Sonal, you're watching GAIL.
Yes, Lata, GAIL will be in focus because the much awaited tariff revision for 2 important pipelines, that is HVG and HVG upgradation, has come in. However, it is lower than what the street was expecting. Well, the integrated tariffs have been hiked by 3% at 41.11 rupees per MMBTU. Why are these 2 pipelines important? Because they account for around 60 to 65% of the total gas transmission volumes. And why is it a dampener? Because the street was expecting that there could be a 15% hike. In fact, GAIL had itself applied for more than 100% hike in these 2 pipelines. There is also a revision for the Mumbai pipeline hike, but the EPS will only increase by around 1%.
Okay. Sonal, I'm interrupting you because we have a very important guest waiting by. We'll come back to you, Sonal. KK Mistry has joined us all the way from Hong Kong. We have pulled him out of a meeting. Mr. Mistry, good morning and thank you very much for taking the call.
Morning, Lata.
What is the impact of this DHFL default, you think, today?
I think there might be a knee-jerk reaction in the market. But I don't think it will be as severe as the ILFS one was, because ILFS came as a surprise. DHFL people have been talking about for a fairly long period of time, and therefore I think it's pretty much factored in. So there might be a knee-jerk thing for a day or two, but I don't think it will be systemic or create a long-term problem. That's my view.
Besides the rate action today, are you expecting any package for NBFC, HFC from Reserve Bank, either today or very soon?
My sense is we would see 2 things. We will see a reduction in interest rates by 25 basis points. That's my personal view. We will probably also see some infusion of liquidity in the system, which could be through either OMO operations or maybe even a cut in the CRR rate by 0.25%, something we'll have to wait and see. Liquidity over the last few days has started turning positive again, system liquidity, but the risk averseness which is there in the market, which is impacting the willingness of banks to lend money to many of the NBFCs, that risk averseness needs to get corrected. The first step of creating confidence amongst banks to lend to NBFCs was the liquidity requirement which RBI came out with a few days ago. And my sense is they will try to do something now to give some support to the NBFC sector, because if this kind of thing continues, then you could see a bigger problem come up over a period of time. So I think there will be some measures to give confidence to banks to start lending money again to NBFCs.
Mr. Mistry, good morning. In fact, that was my next question. You started by saying that the DHFL issue has largely been factored in, but do you see a rub-off on sectors with high dependency on NBFCs, whether it's, real estate, housing, autos, etc.?
Well, these are the sectors which have always been, or which have already got impacted because of the NBFC situation that we've seen for the last 7 to 8 months. So these sectors have not been getting liquidity with the same ease as they were getting pre-September when NBFCs were active. Banks are lending to some of these sectors like auto loans and things like that, but the void which has been created because by NBFCs being absent, that void has not entirely got filled. And for economic growth in the country, it is very critical that sectors in the economy like real estate, like in the SME sector, these sectors are provided credit with. So the risk averseness which is there with banks, RBI, in my view, should look at steps to reduce that risk averseness or take away that risk averseness.
Okay. Now you're going to call this question speculative, but still I must ask. The hope in the market is that DHFL will find a buyer. What would you give those odds?
I really honestly do not know. Honestly do not know. It would be pure conjecture. Certainly it's not HDFC, that much I can say. We hear in the market of one or two buyers who have been there, but I don't know whether they are still there or whether what the status is. I have no idea.
All right, we'll leave it at that. Mr. Mistry, it was a pleasure speaking with you. Thank you very much for sparing time for us between meetings, and we hope to touch base with you after we know what the Reserve Bank will do.
All right, well, that's the word coming in from a big industry player, KK Mistry. He expects that this DHFL issue has largely been factored in. It has not come as a major surprise as the IL&FS contagion had come through. So perhaps not so much of a damage. Let's see how it plays out. For now, let's get back to top 10 because Bharat Forge is another stock on our radar. It could be negatively impacted. We've got the North America truck order data that came in yesterday. It's the worst month since July of 2016. So it's a 3-year low almost that we're seeing in terms of North America truck orders. Now, ACT Research, which is the company that gives out this data, says that this decline is attributed to two reasons. One is that there's been a sharp fall in spot freight rates in the North American truck market, and two, there's been a large order backlog. So these two issues have led to a major decline. 70% year-on-year fall, 27% month-on-month fall, and it's not just Class 8 trucks, it's even Class 5 to 7 medium-duty trucks which have fallen about 21% year-on-year. So two stocks that get impacted. Bharat Forge, of course, 12% of their revenues comes from there, and Ramkrishna Forging as well. You have over 20% of their revenues from the North American market.
Actually, I think, is Sonal still with us? We didn't let her finish. Okay. I think I'll just finish what Sonal has. She's left a note for us that the tariff revision will be a big disappointment for GAIL, and CLSA has cut the earnings estimates by 4 to 7%, reduced the price target as well, downgraded it to underperform from buy. So expect a red on GAIL. Sorry, we couldn't complete the argument with Sonal. Ekta, stocks on your radar?
Well, yes, I'll start with Lupin, where the Japanese regulator has completed the inspection of the company's Mandideep facility with no critical or major observations. So positive news. Japan is definitely a much tougher regulator after the US FTA. Indico, red because the US FTA in fact conducted an inspection at their sterile injectables plant in Goa and issued 4 observations. Natco, I expect the stock to probably be in the green as it's filed an ANDA for J&J's hypertension drug Tracleer in the US, market size $260 million, and they believe that they have exclusivity status or could have exclusivity status on it.
Okay, Ekta, thanks a lot for that. Well, some more stocks that are in the news this morning. Anisha is here to give us the lowdown. Hi, Anisha. Good morning.
Hi, Sonia. Very good morning. I'll start with Force Motors because there has been an improvement in terms of the production month on month and even sales. So, for example, the production has gone up to over 2,000 units versus 1,500 earlier, and similar is the case with sales month on month. However, this is not the case for VST Tiller. There seems to be some pressure when it comes to the rural income because we are seeing the power tiller sales dip to 1,400 units versus 1,750 last year, and even the tractor sales has dipped. Moving on to ICICI Pru Life, wherein the annual premium equivalent has increased 10% year on year, 5% year on year and 10% month on month, but the growth rates has slowed down considerably from over 20% that we were used to seeing. So there might be a sentiment downtick there. We were talking about the rating downgrade for DHFL. There's another rating downgrade, and this is for Eros Media, wherein 750 crore worth of facilities, both long term and short term, has been downgraded to default category now. So keep an eye out on that one in trade today. And lastly, some unverified reports coming in that NTPC SGVN merger might be back on the table, and we can hear an announcement very soon.
Okay, thanks a lot for that. Here's a quick recap then of our top stocks in focus. Stocks with positive news flow this morning. There's Eicher Motors, Lupin, Natco, Force Motors, NTPC and SJVN. While stocks with negative news flow this morning, there's DHFL, Yes Bank, IndusInd Bank, Reliance Capital, Indiabulls Housing Finance, L&T Finance, Repco Home, GAIL, Bharat Forge, Indoco Remedies, VST Tillers, ICICI Pru Life, and Eros. Of course, DHFL, GAIL, Bharat Forge is something that I just mentioned a while back as well. But after a delay in the NCD interest payment of over 1,000 crores, crisis hit mortgage lender DHFL is now staring at a 750 crore commercial paper liability this month. Nisha Podar gets us exclusive details on the various steps being taken by DHFL to bridge that liquidity gap for meeting its obligations to avert a default. Hi Nisha, morning.
Good morning, Sonia. Yes, sources with direct knowledge have shared that DHFL top management is in discussions with SBI-led lenders consortium to the company for finding out solutions this morning after crisis had hit again because of the NCD repayment or interest payment delay that happened day before yesterday. Now, what they are looking at is a solution to the shortfall of about 1,500 crore rupees of their liabilities in the month of June. They are going to get 5,500 crore rupees in terms of the outflows required, and the inflows that they get is about 4,000 crore rupees is what we gathered, which includes Blackstone's money for Aadhaar. Now that 1,500 crore shortfall could be bridged by selling off some part of the portfolio to the lenders. And that's the discussion that is going to take place today. Apart from that, what are they going to do is Avance Financial, which has been earlier sold to Warburg Pincus. For that, RBI approval has come in. And on account of that, the promoter and DHFL as a listed company would get 800 additional crore rupees in 1 month's time. So that will also help in the company's liquidity. What I do gather is that the first CP obligation, which is going to hit them on 7 June of 100 crore rupees, they have arranged cash for that. So all those downgrade concerns really coming in on account of their defaulting on the CP repayment can be taken care of. At least the company is confident of that 100 crore rupees, and later on in the month 650 crore rupees of liability on account of CP, which is going to come to them, is also going to be met through internal accruals is what we gather. So these are the steps being taken. Of course, we'll get more details, and the long-awaited stake sale will really solve for all their problems, but that will take at least 3 months to come in.
Okay, well, that is this stake sale that everyone is waiting for, and we have to see whether that goes without a hitch. Thanks a lot for that, Nisha. We'll take a quick break. Welcome back. Yes, we were doing technical strategies, so let's first finish all the strategies. And Ashish Chaturmota, the head technical and derivatives at Sanctum Wealth Management, has joined us. Good morning, Ashish.
Good morning, Lata.
What's the Nifty Bank strategy? Or are you avoiding the indices till the policy comes?
Yeah, so I think, we are avoiding, but still we have a very positive bias. So I think if there is any dip due to this event, then I think 11,950, 960 is a very good zone where you will see a lot of, buying interest coming back to the market. So I think another 40-50 points dip and there will be good interest in the market. Positionally, I think 12,150, 12,200 is definitely looking possible, because the kind of OI addition we are witnessing, on every dip is clearly indicating a lot of long interest is there in the market. Positionally, I think 11,900 should be kept as in stop loss, and 12,150, 12,200 is an indicative target we are expecting next couple of few trading sessions. But apart from index, I think there are a lot of stocks which are showing good interest, and within that, the first long idea would be on V-Guard, which has seen a very strong OI addition in last 2-3 trading sessions. And if you look at trading volume activity, it has jumped up significantly in last 5-6 trading sessions. Stock is on a verge of a strong breakout on a weekly and monthly chart frame. So keeping this in mind, 235 would be my trading stop loss. On an upside, I'm expecting stock to hit all-time high zone and can target somewhere around 262 kind of levels in next couple of trading sessions. In the capital goods basket, I think L&T is showing a very strong traction. Last 4-5 trading days, it has been consolidating near its 52-week high. But I think if you look at 1540, 1545, there's a strong support in the stock, so keep that as an trading stop loss. On upside, 1620, 1630 could be a short-term target one can expect in L&T. And in the NBFC basket, Cholamandalam Finance, after hitting a 52-week high, is seeing some consolidation for last 3 trading sessions. But I think on dip around 1510, 1515, it's a good opportunity to initiate a long. 1510 would be my trading stop loss. On upside, 1590, 1600 is a short-term target one can expect in Cholamandalam Finance.
All right, Ashish, thanks a lot for all those trading ideas. So that's the trading idea, but of course the big talking point today and the big event today is the RBI monetary policy. Anand Narayan, professor at SPJ IMR, is with us now. Anand, hi, good morning.
Morning, Anuj.
So, last week the discussion was whether it could be something in between 25 and 50 basis point as well, 35 basis point. Your thoughts on what's the base case?
So I'm an orthodox guy on which I'll go with 25 basis points and an accommodative stance. I think more than the actual quantum of rate cut, what the market is looking for is, signals on liquidity. Liquidity has turned surplus, which is a good sign for the market. It will be looking for some indications from the RBI and the MPC that liquidity will stay surplus for a while. And I think an accommodative stance will give relief on that front. Second, of course, the market will be looking for anything specific in the press conference around the issues around NBFCs right now. I'm sure Governor Das will make some comforting noises there. And I think RBI will stand ready to step in if they see anything of a contagion developing right now. At the moment, of course, it's individual issues. I don't think they'll do anything specific, but they'll probably make comforting sounds around that. So these are the two things to really watch out for on liquidity and accommodation, as well as anything specific around NBFCs.
Best guess, good morning Anand, thanks for joining. So the best guess on housing finance and NBFCs would be just do a Mario Draghi, whatever it takes, but actual package only later, you would say?
Look, the market's obviously very nervous. And while it's about one DHFL right now, the bigger fear is what if this spills over to a lot of other names which have real estate exposures. And that's not a healthy situation. So if you have some kind of a mini panic setting in, or even signs of that, at some stage, the central bank and the regulator and the government will probably step in to cool things down. And that's the right thing to do. Frankly, there is no need to panic. And the comforting noises from the government and the RBI will help in that direction. However, alongside that, I do hope and pray that we don't just stop at a solution from the RBI in lower rates and something extraordinary. Clearly, the whole sector requires a lot of reform and a lot of other issues to be sorted out to sort the trust deficit. I hope those reforms continue alongside as well, and the focus should not stop at just rate cuts and liquidity.
Anant, hi, good morning. The bond yield says it all, right? I mean, over the last couple of weeks, it's softened by about 60 to 65 basis points. Do you see it continue to remain below that 7% mark? And has it factored in the rate cut and the accommodative stance already?
A lot of it has been factored in. And in a way, I guess the markets are also forcing the MPC to acquiesce and actually continue with the rate cut and an accommodative stance. If the MPC actually even mulls doing something which is less than what the market expects, the reaction can be quite violent. I think given the fact that inflation remains completely under control, given the fact that global factors, look at global yields right now, and oil prices have come down as much as they have, clearly the room for accommodation has increased dramatically. And to that extent, given the stresses in the economy, given the stresses in the financial services ecosystem, I think this accommodation will continue. There are stress points, though. One, of course, as I said, the need for real reforms around NBFCs. Second, something I worry about personally is the fact that our fiscal situation is not truthful. It's not complete. We're not seeing the full picture. And to that extent, clearly, I'll pay a lot of attention to how the budget looks like in the first week of July. Now, these are factors which are more medium term. For now, of course, because of the strains in the economy and NBFCs, I think the noises will be pretty comforting.
All right, Anant, we'll leave it at that. And of course, we're going to touch base with you after we get the policy at 11:45. We have spoken to perhaps all the major economists and bankers who have voiced their concerns. Let's just remind you of the key things that they pointed out. Here's a slice of the conversation.
The slowdown actually is on anticipated lines, and no matter how we slice or dice the data, it's clearly showing a slowdown in the underlying momentum. And what it is actually suggesting is that the economy has been hit both by the global shock and also the domestic shock, because both private consumption and investment have slowed down. I think the more important question is sort of the growth impulses going forward. And as of now, the numbers for the April as well as the early indications for May are that the growth momentum actually has continued to slow down. So I think the worry at this stage is that the growth impulses, both domestic and global, look quite weak, and therefore risks to the growth profile for FY20 are actually to the downside.
Okay, point taken. Sajid, let me come to you. You know, the MPC's primary mandate is inflation control. But now with global and domestic slowdown, as Sonal points out, is the inflation trajectory likely to be even lower than what RBI forecast in April? Is inflation no problem?
Well, Lata, I think, there'll be more comfort now that 4% target over the next 3 or 4 quarters is not under immediate threat. Because until a few months ago, the worry was that core inflation was very elevated, stuck around 5.5% for about 6 months at the end of last year. Food inflation was particularly artificially low, and the concern always was at some point food prices would bounce back, and that together with core inflation would take the headline number above 4%. Now with core momentum clearly slowing in the last 3-4 months, which is perhaps the best manifestation of what Sonal was saying, growth has slowed. I would argue both domestic consumption has slowed, exports will slow in the coming quarters given the global outlook, and when two engines suddenly slow, there is a real concern of hysteresis here in the economy. So with core inflation softening, it does two things. One is it kind of reaffirms to the MPC that growth momentum has slowed, and they had spoken about output gaps opening up 2 months ago. They'd probably think output gaps are getting a little bit bigger. And secondly, it provides comfort that even if there is some mean reversion of food prices, that the 4% target is protected. So I would argue, yes, the incremental information between the last review and this review is that perhaps more comfort that for now inflation is not to exceed 4%, and more concerns that both domestic growth and global growth momentum have slowed further.
Okay. Yes, that will not be a problem. Perhaps we're going to be south of 4% comfortably. But Samiran, traditionally a loose monetary policy, or when you are loosening the monetary policy, you have to have one eye on the fisc. At the moment, that looks like a problem. We don't know. The budget is a month away. But the tax revenues of last year have been, 1.6 lakh crore short. On that base, the February budget was expecting, some 15% tax revenue growth. It's clearly going to look like a fiscal breach. Is that okay at this point?
So traditionally, MPC has not second-guessed the government on the budget, so they will probably wait for the actual budget announcements before taking a firm call on the fiscal. But if we are right on our characterization that growth has definitely slowed down and inflation risks are not in the horizon, then the basic reason why we track fiscal so closely is to see its impact on inflation. So if we are more or less comfortable that inflation is on track, then you can for a while even tolerate a bit of a fiscal slippage as long as it is well understood that it is for a temporary period and it will come back on course. So from that perspective, I don't think in the June policy the MPC will be that much worried about fiscal slippage. This is a time to think of more growth, less of fiscal.
The whole problem, Soumya, appears to be that even the rate cuts have not been transmitted. We are unable to loosen the policy effectively, even when we cut rates. So how do you assess the situation then?
I think, Lata, this transmission has been a perennial problem in the banking sector. I think there are several idiosyncrasies involved. The first point is that the banks only borrow not more than 1.5% of the total liabilities from the repo window, which is basically the signal for transmission. Until and unless the deposit growth rate picks up, the banks cannot sustain credit growth, and this situation is unlikely to revert in the next couple of months because there has been a significant currency leakage. If that is the case, banks cannot cut deposit rates. If the banks cannot cut deposit rates, lending rate transmission will be equally difficult. So given this issue, I think that transmission will remain an issue in the next couple of months, and for that the Reserve Bank has to think some out-of-box ideas how to do that.
Welcome back. The SGX Nifty is indicating that we'll have a start now in the red territory. That's, I think, the market getting scared by this DHFL news flow. 12,028 is where the Nifty futures opening is suggested. Actually, Nifty futures closed at 12,056. So that's the Nifty futures. And now let's again bring back SGX Nifty. We were not trading yesterday, of course. We had an off day. So 12,025, essentially, it's indicating a 30-point downtick, which would be Tuesday's low as well. Ashwini Gujarat, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning. Ashwini, what's the trade for you? If we open with 20-25 point downtick, is there a short trade or do you want to buy the dip?
Good morning. I don't think there is much new in DHFL. I think for the better part of last year, this has been speculated. I would probably like to go short in case we start seeing a big decline, which means at the open, Nifty opens say 70-80 points lower. If it's 30-40 points, then that would mean that chances are it's getting digested, because bull markets, these sort of news flows come in and often the market tends to find excuses to move up post the open. So my sense is that still early to say whether we should go on the downside with this news, because the global markets are recovering. So that will also play against this. But I would like to short if there is good reason, and if the bank Nifty is down 200 points at the open, etc.
Okay, fair point. There are countervailing bullish forces. You will have to recognize that. Sudarshan, good morning to you. What would your take be? Is there a long trade, short trade, Nifty and Nifty Bank?
Good morning, Lata. Well, this whole thing depends on how markets react to what the RBI says, and that's something that is beyond my comprehension. But just we will go by the charts, and I would say that this is a trade where we want to buy on dips. That morning gap down is a dip for me, so I would go and buy the Nifty. Actually, I would also go and buy the Nifty Bank without understanding how markets will react to the news. But the chart suggests that there is more upside here. So this dip should be bought into. Just use call options for today so that the risk is limited. And that's the way to trade it. Buy Nifty, buy Bank Nifty, use call options that are expiring today.
Okay, fair enough. Mitesh Thakkar is also with us. Mitesh, hi, good morning. Would you concur that this dip at whatever point should be bought into? And what would be the key levels to watch, both upside and downside?
Yeah, good morning. I would possibly start the day with that opinion that 12,000 holding for the Nifty should be a good sign. So if we are opening around that and immediately start bouncing back 5 or 10 points below the day's low becomes your stop loss for long positions, and there's a good chance that we might see continuation if 12,011,990 is held. Having said that, on the upside, 12,200 is what I think the Nifty could do if the trend continues. And on the Bank Nifty, I think I've been maintaining a range bound stance, 31,700, 720 to about 31,280, 250. And if we start getting past 31,720, then I think a test of 32,000 is very likely.
Okay. Sudarshan, good morning. So in terms of stocks, what's on your list in terms of buys and sell?
Well, because we are wanting to buy the index, I'm looking at mid caps. Voltas is an excellent opportunity. There was a small correction, a very bullish pattern, head and shoulder, a bullish head and shoulder is in place. I think it's worth buying. So Voltas is my first buy. The second is Siemens. Siemens has been an outperformer and that should continue. After a 4-day consolidation, it's just suggesting a breakout on the upside. That's a buy. And finally Raymond's, which is now pushing against strong resistance and crossing it at also new highs. So Raymond's is a short-term buy, while Siemens and Voltas you can actually hold for many weeks. But all three are buying ideas. I have two quick short sells, Glenmark and Z. Z I think is going much lower. So the short sells are always intraday, but both are available.
Fair point. Ashwini, you're going with a lot of financials.
Yeah, obviously I wasn't aware of DHFL, but the fact remains that bad news invites buying also. So DCB Bank is a buy with a stop of 232, target of 238. Maruti is a buy with a stop of 7030, target of 7125. HDFC is a buy with a stop of 2200, target of 2275. United Spirits is a buy with a stop of 560, target of 595. LIC Housing is a buy with a stop of 560, target of 585. And if you have to buy, try to buy HDFC or Bajaj Finance, because there will be a certain move towards quality.
No, actually, I thought that your point made sense, because today you are expecting the cost of capital to fall because of rate cuts and stance. So maybe even auto stocks should benefit.
Yeah, I think Ashwini will have to revise that DCB target. I think there's something wrong in that. Just that call we will revise. But there's a buy call, of course. But I think this target was a bit wrong. We'll revise that.
Okay, well, while we do that, Mitesh, what about you? What would your top stock ideas be for the day? Anything, in the NBFCs or auto space? I mean, if there is a dip, would you buy into any of these stocks?
See, I think that will be something which will be situational, though I do like Bajaj Finserv, Bajaj Finance. They've been on the buying list, L&T Finance as well. But I think would wait it out and see how the market plays before taking a fresh call here. Coming to stock side, I have 3 buys to a sell. Coal India is a buy with a stop at 258. Look for targets of 275 here. Godrej Consumer has been on the buying list for the last few days. That's a good chart structure. Can be bought with a stop at 688 for targets of 725. And my final buy call is on United Spirits. That's a buy with a stop at about 550 or just below it, and look for a slightly positional target of 615. I have one sell call, that's Z. That's a sell with a stop at 353 for targets of 332.
Okay, thanks a lot for that. Gentlemen, we will come back to you with lots of questions on more stocks. For the moment, it's a break. We will come back with Deven Choksi of KR Choksi Management to look at some fundamental cues. We will also have Vinod Sharma of HDFC Securities joining for F&O Strategy.